Stephen Roach, Senior Fellow at Yale University and former Chairman of Morgan Stanley Asia. Stephen, thanks so much for joining us. Let's kick off with those new tariffs being introduced on the EU. Are you surprised to hear that? And how significant an impact might that have on growth and trade between the two regions?
I'm not surprised. I mean, this has been brewing for a while. It's actually, compared to the tariff battles with China, this is small change, so it's really not of enormous material consequence. But it's emblematic of the fact that political leaders, especially our own president, feels empowered to deploy tariffs as an instrument of international economic policy without any appreciation for the tragic history of actions like that in say, the 1930s or in other periods as well.
Stephen, in terms of those trade talks between the U.S. and China, they're expected to meet again here in the U.S. next week. What do you think is baked into the market in terms of expectations? And do you think we could actually potentially get some sort of deal in the coming weeks or coming months?
Well, I think, there's hope, Morgan, but I think realistically the best we can look for would be a superficial deal giving the Chinese the opportunity to buy more soybeans, possibly some airplanes. But the big structural issues on technology transfer, intellectual property theft, allegations of illegal subsidies of state-owned enterprises, we're nowhere on those. And the U.S. side is insisting on an enforcement mechanism that China is not going to buy into. So no big deal, but maybe something cosmetic, and even that I think is a stretch in light of other issues that are on the plate between the two countries right now.
Where do you stand at the moment, Stephen, as to the global growth environment and whether we're likely to hit a recession in certain regions and how soon that might arrive?
Well, I think we're in a pretty precarious place, Wilf. I mean, the issue on terms of trade tensions, which I don't think is discussed because it sounds a little technical, is that we live in a supply chain world. So when we impose tariffs on one country, they're being spread immediately to many, many countries around the world. I think the numbers on a study I just read showed about 73% of all the expansion in global trade since the early 90s has come through supply chains. China accounts for the bulk of that supply chain-centric activity. So we're not just putting tariffs on China, we're putting tariffs on a number of countries in East Asia, including Japan, Korea, Taiwan, and others. And that's why global trade is so weak, and that's why the global economy from East Asia to Germany and elsewhere in Europe is really being hit hard by this seemingly bilateral tension between the U.S. and China.
Stephen, just quickly, a final question on your latest take on the situation in Hong Kong.
Well, I think it's tragic. I think it's a great city. I lived there for a number of years, and I think Hong Kong is going to have a difficult time reclaiming its former mantle as a world financial center. I don't think it's of major consequences to the Chinese economy, but it certainly does challenge their ability to manage their external relationships as well.